It's time now for some business news, and for that, let's cross straight to Hong Kong now to speak with Jameel Ahmad, Chief Analyst at GTC Group. Hi, Jameel, once again. Global markets this Thursday reacting to the latest US inflation data.
Exactly that, and the smoke and mirrors, actually, that we saw in recent days have really cleared up, and the sun is shining through because we have all three of the US major stock markets, which is the S&P 500, the Nasdaq, and the Dow Jones. They all closed at record highs yesterday, with the S&P 500 in particular hitting 5,300 for the first time ever. The reason for this is because of what we've been speaking about in our updates this week, is that the US inflation report come in with a slight decline over the previous month. We had 3.4% annualized against 3.5% on the past month. That has kick-started the car of optimism that the Federal Reserve, which is the US central bank, are still in line to cut US interest rates later in 2024. And in fact, if you look at September, we've now seen that as of this interview, the probability of an interest rate cut in September has now increased to 75% against just above 40% just 2 days ago. And this shows that the Fed are still in position to keep the door open on a lower US interest rate cut. And that is really food for thought for investors as well, that this market environment can continue to be positive as long as the Fed still look to cut interest rates this year.
And EU inflation numbers are also due this week, Jameel.
They are, and now the focus turns away from the US economic calendar, where we've had two different inflation reports, but inflation still remains the name of the game because we have the EU inflation report that is set for the end of the week. Now, actually, it seems to be that the ECB, which is the European Central Bank, are in the driving seat to cut interest rates in Europe as early as next month. That's because, unexpectedly, the inflation target, which is 2%, whether it's the Fed, which is the US Central Bank, the ECB, or the Bank of England, that target seems to be heading closer to home for the ECB than its peers, which is why as long as we get a reading that suggests that 2% is still going to be in sight, maybe at some point before the end of this year, we should expect for more hype and optimism that the ECB will cut interest rates next month, which should bode well for European stock markets.
And Jameel, the market's also keeping an eye on one of our top stories today, that is Vladimir Putin's state visit to Beijing this Thursday.
Absolutely. I wouldn't say it's a day-to-day market risk, but certainly something that we have to watch from the sidelines because we have two major members of the BRICS alliance. And at the same point, we're just days past where the US administration, which led by President Biden, has imposed up to 18 billion of new tariffs on Chinese goods. So the time is going to be pretty interesting because we know there's some fractures in the relationships, both with the US and China, as well as from the US and Russia. Again, when it comes to the day-to-day market environment, what we need to watch for is whether there's any indications that maybe Russia will make more public statements supporting that Beijing peace plan from last year. That might move the market. Otherwise, what we're seeing now is more signs of a multipolar world, multipolar economy. And of course, if the Russia and China relationship continues to get stronger, that bodes well actually for the global economy. But for day-to-day investors, it won't matter so much for financial market portfolios.
Jameel Ahmad, as ever, thank you so much.